budget, maintenance of record and account keeping in physical education. Now we have introduction. Budgeting is an essential ingredient of administration in general and financial management in particular. To budget is to formulate a financial plan in terms of work to be accomplished and services to be performed, strictly in consideration of realistically conceived income expenditure estimates for a particular period of time, that is annual budget of the organization, or for a specific event, that is budget estimate for organizing a national championship. The budget usually reflects long-term planning of activities and programs and needs which require immediate focus. A typically budget will precisely include number 1, estimated income and expenditure for a particular period or event. Number 2, programs, activities and functions to be carried out. Number 3, services to be rendered. Number 4, benefits accruing from the planned activities and services. And number 5, justification for generating additional resources and unforeseen expenditure. Budgeting may be done both at micro, for example section or unit, and macro, that is organizational or departmental levels. Realistic planning of budget at both levels provide impetus to performance-oriented activities and programs. Likewise, maintenance of records or record management is the area of office management which deals with the maintenance of records of organization. Record management refers to the activities designed to control the life cycle of a record. Whereas in records maintenance, the guiding principle is that information must be rapidly available at the prerequisite time and in the form it is required. Although different methods or system can be used to bring about efficient records maintenance, there are some basic rules that must be respected. So as to manage any information well, it is vital initially to determine its characteristics and functions. This is important because the way in which records are arranged depends on the type of information they contain. Now we have purposes of budget. Listed below are a few major purposes of budget in physical education. Number 1, it helps the organization to plan its activities and programs within its financial resources and keeps a check on the undesirable expenditure. Number 2, it serves as the surest way of evaluating ongoing programs and forecasting future directions. Number 3, the size and strength of a class, quantum of supplies, materials and equipment, teaching methodology, teaching and coaching facilities and personnel etc. are greatly affected by budgetary provisions. Number 4, budget keeps physical educators and coaches activated and involved in the developmental programs. Number 5, the philosophy, policies and needs of physical education are outlined in the budget and vigorously pursued by the organization. Number 6, proper budgeting helps the administration to streamline its accounting procedures and ultimately make activity programs cost effective. Number 7, budget makes managers conscious of their authority, responsibility, constraints and limitations in running administration. Now we have another point, that is principles of budget formulation. Some of the principles of budget formulation are as follows. Number 1, the budget should be prepared by a committee or by the head of the unit assisted by a select band of teachers. Number 2, the budget should reflect financial needs of the department or programs in relation to the objectives to be achieved. Number 3, it should be framed in the light of previous year's budget, that is its achievements, shortfalls, spillovers, pitfalls, constraints, etc., and the present needs and aspirations. Number 4, it should be prepared well in advance of the financial year so that there is ample scope for its revision and recasting if warranted. Number 5, utmost economy should be exercised in the preparation of budget. Number 6, budget planners must take into consideration extraordinary conditions, that is unforeseen emergency such as weather conditions, sudden shortfall in revenues, unusual breakage, etc., while estimating income expenditure for the year. Number 7, the budget should therefore be flexible and not unduly rigid. Number 8, it is unhealthy to operate budget before it is duly approved. Now we have preparation of budget. Important points to be considered while preparing budget are enumerated below. Number 1, attach detailed justification notes and schedules of expenditure with the budget proposals. Number 2, keep options open and alternatives ready if cuts are imposed on the budget. Number 3, unless otherwise provided for, the financial rules do not generally allow reappropriation of funds from non-plan to plan and vice versa, as well as from one head to another. Number 4, in order to prove credibility of the budget, take into account the actual for the previous year while preparing the proposals. Number 5, follow general economy instructions on expenditure for purchase of costly equipment, furniture, etc. issued by the high-ups in letter and spirits. Number 6, prepare a separate satellite budget for the celebration of a special occasion or event. Now we have operating budget. After approval, the budget is operated by the individual authorized to do so. Guidelines for operating budget are as under. Number 1, obtain written sanction before spending money. Number 2, make sure that the expenditure is booked immediately under correct head so as to constantly meter financial position of the unit. Number 3, follow the standard procedure of making purchases, requisitioning services. Number 4, obtain proper receipts for every penny spent and see that the receipts are duly verified. Number 5, remit all daily collections to the bank immediately. Do not spend from out of the receipts. Number 6, keep an impressed amount to meet exigencies. Number 7, do not allow money to change hands but make payments through checks. Pay cash only when it is unavoidable. Number 8, maintain a day book to keep record of daily receipts and payments. Number 9, never make advance payments unless it is essentially necessary, in which case obtain a written approval of the competent authority and maintain proper record of it. Number 10, do not allow advances, for example, for purchases, TADA, contingencies, etc., drawn by officials, coaches, managers, etc., to remain unsettled for too long. Number 11, review the financial position of the unit from time to time and make adjustments and ask for reappropriation if situations warrant it. Now we have another subheading, that is maintenance of records. Maintenance of records or record management involves the storage, retrieval and use of information. More precisely, it is the application of systematic and scientific control to all the recorded information that an organization needs to do business. Poor records management result in difficulties in administering, planning and monitoring an education system. In fact, poor record management and the lack of staff development along the entire information cycle are responsible for problems with management and policy implementation in school and ministries of education. Records, therefore, are an important means of accountability because they provide proof. Thus, while maintaining the records, the following points are to be kept in mind. They are creation and distribution, use, retention, storage, retrieval, protection, preservation, and final disposal. Now we have types of records. We can classify records into following manners. Number 1, correspondence. This refers to letters, memos, etc. Number 2, transactional records. Transactions refers to the purchase or exchange of items. Number 3, project records. Project includes the production of materials and services. Number 4, case files, which may include or subdivided into discipline, performance, etc. This refers to files like personnel and student files. Now we have principles of records management. The following are the principles of records management. Number 1, principle of purpose. While maintaining the record, the purpose of record keeping should be clear. Records without purpose are wastes of time, labor and money. The purpose of record keeping should not be unsuitable for organization. Number 2, principle of verification. There must be evidence of all the documents which are preserved in an office. If the verification is not possible, it has no value as proof in court. Number 3, principle of classification. All the records should be classified on the basis of nature of documents. Proper classification of records helps to avoid confusion. Number 4, principle of reasonable cost. While maintaining the record, the cost factor should be considered. Therefore, the valuable information should be recorded systematically and useless information should be disposed. Number 5, principle of elasticity. The process of record management should be elastic in capacity. That is, it should be capable of being expanded or contracted according to requirement. Number 6, principle of retention of records. The main objective of record management is to preserve the required document for future reference. The unnecessary documents should be disposed. Therefore, according to value and importance of records, it should be preserved. Number 7, principle of availability. Records are preserved for future reference. It should be protected in such a way that required information should be easily available. The records are useless if they are not available in the current time. Now we have importance of records management. Number 1, preservation of record. It helps in management and control of important records. It helps to protect necessary records with care and disposes useless records. Number 2, evaluating progress. It helps in evaluating progress of organization. It helps in preservation of history of organization. The past record shows direction for organization. It helps in finding out the weakness and strength of organization. Number 3, facilitate comparison. Record management helps to evaluate progress and performance. It helps in comparison between one period of time and another or between same time. Number 4, helpful in decision making. Records are the memory of any department or institution. It is useful for future decision making process. The study of past records shows direction for future. It supplies information to the organization whenever it is needed. Therefore, it helps in taking decisions. Number 5, efficiency in operation. Record management helps to provide required information with speed and accuracy. It helps to make office work efficiently and effectively. It helps to increase efficiency of the office. Number 6, evidence. Records acts as an evidence in the time of dispute. It is important for the settlement of dispute. It can be shown as proof in court. Now we have account keeping. The role of a non-trading firm is to provide services to its members. However, in order to do the same, it needs to earn some revenues and incur certain expenditures. When a non-profit firm does so, it needs to prepare an income and expenditure account which can help it in ascertaining the surplus earned and deficiency incurred during a period. Now we have income and expenditure account. The income and expenditure account is a summary of all items of incomes and expenses which relate to the ongoing accounting year. It is prepared with the objective of finding out the surplus or deficit arising out of current income over current expenses. Income and expenditure account is a nominal account. Therefore, the role of nominal account, that is debit all expenses and losses and credit all incomes and gains, is followed while preparing it. Now we have preparation of income and expenditure account. For preparing an income and expenditure account, follow the step as listed below. Include all items of revenue, receipts and expenses on the respective side of the account. Ensure that no item of capital incomes and expenses are included in this account. Also, adjustment for amounts prepaid and outstanding with respect to each item will have to be made. Further, items included in receipts and payment accounts, depreciation, provisions and profit or loss on sale or assets will have to be included in this account. Finally, after putting down all items of revenue and expenses, we will get a balance. The resulting balance will then reveal the surplus or deficit for the period. Now we have accounting standards. Accounting standards are basic policy documents. Their main aim is to ensure transparency, reliability, consistency, and comparability of the financial statements. They do so by standardizing accounting policies and principles of a nation or economy. Accounting standards mainly deal with four major issues of accounting, namely recognition of financial events, measurement of financial transactions, presentation of financial statements in a fair manner, disclosure requirement of companies to ensure that stakeholders are not misinformed. After this, we have objectives of accounting standards. The main objectives of forming these standards are as follows. Number one, the main aim is to improve the reliability of financial statements. Number two, to create the comparability. Number three, it also looks to provide the set of accounting policies that include the necessary disclosure requirements and the valuation methods of various financial transactions. Now we have benefits of accounting standards. Accounting standards are the ruling authority in the world of accounting. It makes sure that the information provided to potential investors is not misleading in any way. Let us take a look at the benefits of accounting standards. Number one, attains uniformity in accounting. Accounting standards provides rules for standard treatment and recording of transactions. They even have standard format for financial statements. These are steps in achieving uniformity in accounting methods. Number two, improves reliability of financial statements. There are many stakeholders of a department and they rely on the financial statement for their information. Many of these stakeholders base their decisions on the data provided by these financial statements. The accounting standards ensure this. They make sure that the statements are reliable and trustworthy. Number three, prevents frauds and accounting manipulations. Accounting standards lay down the accounting principles and methodologies that all entities must follow. One outcome of this is that the management of an entity cannot manipulate with financial data. Number four, assist auditors. Now the accounting standards lay down all the accounting policies, rules, regulations, etc. in a written format. So, if an auditor checks that the policies have been correctly followed, he can be assured that the financial statements are true and fair. Number five, comparability. This is another major objective of accounting standards. Since all entities of the country follow the same set of standards, their financial accounts become comparable to some extent. Number six, determining managerial accountability. The accounting standards help measure the performance of the management of an entity. It can help measure the management's ability to increase profitability, maintain the solvency of the firm and other such important financial duties of the management. Now we have limitation of accounting standards. There are a few limitations of accounting standard as well. The regulatory bodies keep updating the standards to restrict these limitations. They are: number one, difficulties between choosing alternatives. There are alternatives for certain accounting treatments or valuations. So, choosing between these alternatives is a tough decision for the management. Number two, restricted scope. Accounting standards cannot override the laws or the statutes. They have to be framed within the confines of the laws prevailing at the time. Now we have conclusion. Budget making is an art, practical application of the principles of financial management helps to practice this art. The budget formulation criteria depend a great deal on the type and scope of budget, nature of the unit, that is, a section, department, organization, or an event for which the budget is being prepared, and the objectives, activities, and programs sought to be stressed upon. Strictly speaking, a budget is a manifesto of estimated income and expenditure under several heads. Their numbers depending upon the sources of input and the area of development under focus. Similarly, account keeping and maintenance of records therefore are an important means of accountability because they provide proof.